Hey everyone, are you interested in adding an industrial powerhouse to your portfolio that has a market-beating yield and appears to be trading at a 7% discount? Well, stay tuned and we'll take a deeper look and analysis into Cummins Inc. Hey everyone, Kevin Burgess again. Today I'm starting a new series, and this series is going to look at the top investments in my portfolio. So let me give a little bit of a caveat. I am not an investing professional. This video is for your entertainment purposes only. If Cummins is a stock that you're interested in, you'll obviously need to do your own due diligence. Every investor is different, every portfolio is different, and so you need to make your own decision regarding that. Also, since these stocks are the largest in my portfolio, it probably goes without saying that I am long in these stocks, so I do own Cummins Inc. With that being said, sometimes on a daily basis, I can make decisions about my portfolio and really not take into account the big picture. So today, what I'd like to do is step back, take a look at the bigger picture regarding Cummins Inc. and make sure that it's still an investment for my portfolio. Since it is the largest holding in my portfolio, it's probably a pretty important thing for me to do. At the end of the video, I'll decide whether I'm going to hold it, whether I'm going to scale it back a bit, or whether I'm going to even add to the position. If you like the content of this video, please consider giving it a thumbs up. It would help the channel out, and I would really appreciate it. It would mean the world to me. Also, if you like discussions about dividend investing, consider subscribing to the channel and ringing the bell so you'll get notification of future videos. So with that, let's get started. Cummins was founded in 1919 in Columbus, Indiana. It is the largest dedicated global industrial diesel and natural gas engine manufacturer. It's in the industry of construction machinery and heavy trucks, has a $30.3 billion market cap, and is the second largest in the industry behind Caterpillar. In terms of competition, the competition is automakers, because automakers do produce engines, as well as companies like Caterpillar, Parker Hannifin, Packard, Daimler, Eaton, and Dana. In terms of segments, they have an engine segment, which is their largest segment at about a third of their business, a distribution segment, about a quarter of their business, as well as a components segment, which is about a quarter of the business. They have a power systems segment, which is about 15%. And then they've started a new power segment, which right now is very small, but I believe will be one of the competitive advantages for them moving forward. To give a little deeper dive into these segments, the engine segment produces engines that are 15 liters and smaller. The distribution segment includes wholly owned and partially owned distributorships that are engaged in wholesaling engines, generator sets, service parts, et cetera, and maintaining various relationships with OEMs throughout the world. The components segment sells filtration products, after-treatment systems, turbochargers, electronics, fuel systems, and automated transmissions. While the power systems segment is an integrated power provider, they design, manufacture, and sell engines that are 16 liters and larger. So those are the large engines, which are for industrial applications. But it also includes things like power generator sets, alternators, and other power components. The new power segment designs, manufactures, sells, and supports hydrogen production solutions as well as electrified power systems. So when we're talking about moving toward a cleaner environment, this segment, I believe, puts Cummins at a advantage compared to their competitors. In terms of competitive advantages, they appear to have brand loyalty. Some customers request Cummins engines in their vehicles. Manufacturers offer Cummins as an option. They have high switching fees for fleets, and they have the capability of continually improving in emission reductions. So they have this emission reduction capabilities. I think that's going to be pretty critical moving forward. So let's talk about that a little bit further As they transition to clean technology, they acquired in 2019 a company called Hydrogenics. And so Cummins began developing its fuel cell capabilities more than 20 years ago, according to this article. And owning both the fuel cell and hydrogen generation capabilities puts them in a place where they can really build on the future from a clean energy perspective. In terms of reputation, they are one of the 45 inaugural recipients from around the world for the Terracotta Seal. Even got the attention of Prince Charles, who says the Terracotta Seal recognizes those organizations which have made a serious commitment to a future that is much more sustainable and puts nature, people, and the planet at the heart of the economy. In addition to that, Cummins has returned to the S&P Dow Jones World Sustainability Index, and also been named for the 16th consecutive year to the North America Dow Jones Sustainability Index. They've been selected for the Better Climate Challenge. They're one of 35 members with a goal of reducing their Scope 1 and 2 greenhouse gas emissions by 50% within 10 years. So I see Cummins as an industrial, but also as someone who is really looking at the future in terms of a cleaner environment. So I think that's a real competitive advantage for them moving forward. Now, every business has risks. One of the risks for Cummins is the regulation regarding the environment. Every engine obviously produces emissions, and as Cummins works through these cleaner technologies, I believe they're going to have a competitive advantage in this area. There's also regulation around miles per gallon and things like that. So those are some risks for this business. So then also they have competition, legislation, operations, and we all know that supply chain is a big issue at this point across the board, and that's no different with Cummins. They have product liability risks. With all of this new technology they're building, there is product liability there, and they have a COVID risk, and that COVID risk applies to both the demand for their product, the supply of the goods for making that product, and the labor availability for making that happen. From a capital allocation perspective, they have a stock repurchase program. They initiated the last one in 2019 for $2 billion. They have $766 million remaining as of 10/3 of 21. And then in 2021, actually on December 14th, they announced another $2 billion repurchase program that would take effect after the completion of the prior one, the 2019 one. So at the moment, at least as far as we know, they have about $2.766 billion of capital assigned to buying back shares. You can see their dividend growth over the last, 20 years. They have paid a dividend, uninterrupted dividend, for 28 years. However, their dividend growth streak is at 15 years. So 15 years is a pretty good amount of time. The last 5 years, you can see the last 5 years CAGR is a 9% growth rate. That is really incredible. Over the last 20 years, 15%. Their latest one back in July of 2021, 7.4%. The dividend yield for Cummins is 2.68, which is nearly double what the average is for the S&P 500. You can see that their shares outstanding are decreasing. They're investing part of their capital into buying back shares, which makes every share then more valuable for investors moving forward. So that's good to see. They have an earnings payout ratio. For those who don't know what that is the percentage of earnings that are paid out as dividends. You don't want to see that really high, but you don't want to see it really low either. So we have an earnings payout ratio of about 36% over the last 12 months and 35% looking forward. That's a very healthy one. According to Simply Safe Dividends, they look for anything 40% or lower for this particular industry. So it's very healthy earnings payout ratio. Also similar on the cash flow payout ratio. So both of those are good. Earnings per share, you can see that appears to be increasing. They had a rough year in 2020 related to COVID, as many companies did, but they are making a comeback, and that's good to see. Free cash flow is very solid. You can see that it appears to be decreasing, but when you compare it to 2018, there's some serious increase in cash flow, around 50% since 2018. So there's some pretty serious cash flow going on there. In terms of cash, they have $3 billion of cash on hand and $4.4 billion of debt. So their net debt's around $1.4 billion. That's very manageable when you look at the interest coverage ratio, which doesn't take into account cash. It just talks about how the earnings can cover the debt payments. They're at a 21, which is very, very good in terms of debt coverage. So in terms of debt, they have no issues with their debt whatsoever. In terms of financial metrics, Standard & Poor's A+ and Moody's A2, very stable and really good credit ratings. And then Simply Safe Dividends rates them as a 98 out of 99 in terms of dividend safety. Very safe dividend, strong financial profile. Lastly, we will look at the valuation. The fair value, according to Morningstar, is $231. The last close was around $216. If you do the math on that, that's about a 7% discount. Also, looking at Seeking Alpha, they have the average price target at $274. The low price target is $230, which is around their fair value. I think I would even be happy with the $230, the low price. So to give you a sense for where this falls in my portfolio, we had a great day on the market yesterday. The portfolio is now at around $750,000. I'll go down here. This is my Simply Safe Dividends app that I have all my investments in. And I will sort this by percentage of portfolio. And lo and behold, Cummins is 8.4% of my portfolio, somewhere around a $63,000 investment. I am down on it by about 1%. I'm not concerned about that, but I did add some to the position when the price was lower. So this gave me an opportunity to average down in this stock. So my average price right now is around $218, and the current price is $216. So is this something that I want to hold in my portfolio? Do I want to add to it? Do I want to decrease it? From what I've seen in this analysis, I am very comfortable with Cummins being a large percentage of my portfolio. I don't think I'm going to scale it back. I am going to hold, but I also don't believe I'm going to add to it unless there's a significant drop in price and I can get the shares at an even deeper discount. And I may even consider more. One of the rules for my portfolio is I don't want a stock being more than 10% of my portfolio. Cummins is not close to that yet. It's only at 8.4. So I do have room to add into Cummins if I like. Without a significant decrease in price, I will only be holding, not adding to that position. So the next video in this series is going to be Pinnacle West. I'll begin putting together an analysis on Pinnacle West, which is 6.5% of my portfolio. Lockheed Martin will be after that at 5.7%. So that wraps up the analysis on Cummins Inc. I hope you enjoyed that. If you have any comments, please put them in the comment section below. I would love to hear from you. Is Cummins a company you're interested in or not interested in? And if so, or if not, why? I would love to hear those comments from you. I look forward to the next video. And in the meantime, keep learning, invest consistently, and stay invested. With that, I'll see you on the next video.